Hey everyone, Caleb here. Massive news overnight. The market is reacting, and I want to get you caught up before you open your portfolio. Let's dive in. If you've been checking your phone from bed this morning, you probably already feel that familiar pit in your stomach. This is a look at today's crypto sentiment, and we are sitting at an 18 out of 100. That puts us squarely in extreme fear territory. But look at the actual price of Bitcoin today. It's hovering at $64,121, eking out a tiny 0.2% gain over the last 24 hours. Basically, it's flat. The market is terrified, yet nobody is moving. To understand why, we have to pull back the lens. Zoom out to the last 30 days, and that flat line turns into a steep, jagged cliff. We've dropped 19% over the month. You have a brutal month-long slide crashing directly into a completely stagnant 24 hours. The bleeding stopped overnight, but the damage is so heavy, nobody knows whether to buy the dip or run for the exits. Complete trading paralysis. Let's put this month's drop into a wider perspective, because we are a long way off from the peak of the last cycle. This chart tracks Bitcoin since its all-time high back in October 2025, when it hit $126,080. We are currently down 49.14% from that mark. The total market cap has shrunk back down to $1.28 trillion, and the rest of the market isn't offering any safe harbor. Ethereum is dragging along at $1,667, actually down slightly on the day. If you look at the Ethereum to Bitcoin ratio, which tells us how confident investors are in alternative digital assets compared to Bitcoin, it is sitting at an incredibly weak 0.02599. So where is the money going? Look at this comparison. While crypto assets are a sea of red, the Pax Gold Proxy, a digital token backed by physical gold, is trading at $4,225 and actually ticking upward. This flight to safety is being accelerated by what we saw in the headlines late last night. We had another major exploit hit a decentralized finance protocol, draining tens of millions of dollars. Even though Bitcoin's price held steady today, that overnight hack injected a fresh wave of panic into an already exhausted market. When you see money bleeding out of both large and small-cap digital assets and flowing straight into a digital gold substitute, you know investors aren't reacting to daily price swings. They are seeking shelter from widespread, systemic anxiety. I've been staring at screens during these level 18 extreme fear days before. Your brain starts screaming at you to liquidate everything just to make the anxiety stop. During a previous cycle, instead of holding steady, I tried to outsmart the chart. I started obsessively flipping between Ethereum and Bitcoin, trying to catch micro bounces on that exact ratio. You convince yourself that if you just watch the 1-minute candles closely enough, you can trade your way out of a macro downturn. In reality, the best thing you can do is usually close your laptop and take a walk. I bring up my own bad trades to give you some perspective, but I have to be clear. I am not telling you to buy the dip, and I am not telling you to sell your bags right now. You have to recognize when you are emotionally compromised. Until you acknowledge that the market has drained your battery, any portfolio adjustment you make is going to be driven by adrenaline instead of math. So let's take the emotion out of that terrifying number 18 and look under the hood at what the Fear and Greed Index actually measures. This graphic shows the core ingredients of the index. The foundation is built on two major quantitative metrics: market volatility and trading momentum. Essentially, how violently the price is swinging and how much volume is behind those swings. Then it layers on qualitative data. It tracks social media sentiment, literally how many people are panicking on social platforms, along with Bitcoin's overall dominance against smaller altcoins. An algorithm crunches all of those distinct, unrelated data points together and spits out a single, easy-to-read daily score. But remember, this metric is looking backward. It reflects the stress of the last 30 days of bleeding. It does not predict what the price will do tomorrow. That's your news brief. Quick reminder, none of this is financial advice. I'm telling you what happened, not what to do about it. When you break down the math behind the panic, it stops being a ghost story. You can finally look at the market, see the fear for what it is, and make your decisions with a clear head. Like, subscribe, comments open. See you tomorrow.